Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Jeremy Yea, Senior Valuations Editor at CAP HPI. And he's joining us for this exclusive roundup of how trade values performed over the course of September. Now, by way of a quick recap, last month CAP HPI reported a drop of just 0.1% for August, very much in line with both the average for the month and the small monthly dips we have been seeing in the year to date. We'll also take a closer look at some of the key trends across vehicle sectors and fuel types in September, and take a look at whether the factory shutdowns following the cyber attacks on JLR impacted used values across Jaguar and Land Rover. Jeremy will also share some of his thoughts on how trade values are likely to perform in October and Q4. So a busy time as ever for you, Jeremy. Welcome back to the podcast.
Thanks, Curtis. Morning, gents.
Yeah, welcome back. So plenty going on as we approach the end of the third quarter, September month as well. Trying to get your head around everything.
Yeah, the year's gone within a flash, and their months feel like weeks. I think I said it before, and yeah, it definitely doesn't feel any different. And we're already staring down the barrel of October, so yeah, been a busy month again.
Yeah, I know. We talk about it a few times, don't we? You're in that live environment, but you're shutting off at the end of a month, and then you're straight back on to carry on the live and what's happening, while sort of managing everything else.
Definitely no rest for the wicked.
There isn't. Well, let's get on, because obviously this month has been a fairly crucial month for the sector, to say, the big month for the plate change, and obviously, as I say, time of the year before we head into that final quarter of 2025 there. But can you take us through the headline trade values at that 3-year 60 benchmark figure, and how that compares with previous Septembers as we move into October movements?
So September into October, live valuations ended with publication day today. The book went up. The monthly movement is a 0.2 increase. That's against a usual backdrop of a 0.2 drop. So we're 0.4 ahead of where the seasonal average is. And it's been a really stable month, really good month, strong month actually, certainly for September, which has continued all the way through the month. It's been just a follow-on from the summer months. In terms of how it fits from previous Octobers, last year was a 0.2 increase as well, so that was a strong year. 2023, that went down 1.9%. We know that the back end of the last quarter or so, probably from the end of the summer months of 2023, that was a real sharp realignment of over 10%, I think, in that last quarter. And then 2022, it went up from September, October, 0.3. So bang in line with previous years. I would say of the recent years anyway, pre-COVID times, it's probably down a little bit stronger than that. But yeah, average seasonal movement is a 0.2 drop. So we're ahead of that, which is great news for the industry.
And how's that looking from a year-to-date perspective? We've got a couple of months left from October into November, and then November into December. So we kind of, depending on what happens in the final months of the year, a full year point. How does the year to date look? Because it feels like it's on par with last year, but obviously slightly ahead of previous years.
Definitely. Well, so overall, with the plate increases for the year, because obviously we're always valuing the 3-year car at the beginning to the end, it's actually 0.8 up. So that is bang in line almost with last year in terms of where it's tracking overall. It's definitely stronger than some of the previous years. I think overall, it looks like it's probably like the 4th or 5th sort of strongest year. If you take away, I guess, the craziness and the increases we had in 2021, probably like the 3rd or 4th strongest year overall. So yeah, I think we're on track to probably be, depending on how the last quarter, to your point, how it performs overall. We think we're probably going to be in and around maybe 3%, which would be stronger than, the year average, which is probably about a 5% overall depreciation in an average year. So we're definitely on the stronger side of an average year, and we have been all year and even last year, to be fair.
Now, Jeremy, we'll look at fuel trends in a moment, but before we do, were there any notable price movements by age points over the course of September?
Yeah, I think so. 1 year, it went down 0.1% overall, which is roughly £60. 5 years, it's actually up 0.3 or around sort of £40, and at 10 years, marginally up about 11 quid or 0.1. So it's the older ages which have really got the desire in there. But even at every age point, it's very, very marginal in terms of increases or decreases. So yeah, still really good across every age point.
Yeah. And how did the various vehicle sectors perform? I noticed it was a good month for certainly the mainstream sectors, wasn't it?
Yeah, Superman is the strongest at 1%, 1% increase, and that's roughly about 120 quid, which is £117 to be precise. Followed by City Car as well, 0.8. MPV was up 1% overall, and even ones with there's probably a little bit more volume around the lower medium, that was up 0.2. Even SUVs went up 0.1 as well. So yeah, a really good for all mainstream sectors across the board, and even at at most age points as well.
And looking specifically at Jaguar and Land Rover, did you spot any notable price movements that could be linked to the cyber attack on Jaguar and Land Rover, which halted certainly Land Rover production, because we know no new Jaguars have been built this year? But did you notice any movements, any significant movements there for the brands?
Yeah, we did. It's been a real positive month for JLR products across the board. Jaguar went up. I know they haven't built any, but at 3 years that went up 1.2%, and Land Rover went up 1.1%. So, against the average backdrop of a 0.2, it is strong. And bearing in mind, some of those Land Rover products have gone up 2, 3, 4%, which does equate to some thousands of pounds in some cases. So, I think dealers are probably looking for used vehicles coming back into the market. They need to sell something. They're all hamstrung at the minute in terms of registrations, probably waiting for part exchanges to come in. So it's really pushed on, JLR product at the minute across the board. And, with what they're going through, it must be horrendous for the OEM group themselves as well as their dealers.
Yeah, no, I couldn't agree more on that point, and we'll be talking a little bit more about that on this Saturday's podcast, and sort of as that sort of develops, and you do feel for the whole sector on that, and I agree with that one, Jeremy. I mean, turning to fuel type, I mean, it was a good month from all reports for hybrids and ICE, but what trends have you been looking at in there? I mean, obviously, we talk a lot about the fuel market now as to what is driving demand and where is the strengths there in the market.
Price, really, that's driving demand at the minute. I think people have cottoned on tonight. Let's talk about electric vehicles first of all. They were flat overall, and that's against I think it went up increase from last month, where electric vehicles went up 0.1, was the strongest fuel type overall. So to be flat again this month, it's a really good result for electric vehicles across the board. I think we know that the sweet spot is probably from a retail price, put under 20 grand, from a trade price, sub 15 grand, really good, and even into some of the older ones and the much cheaper ones. But looking at the value, I guess that's the value end of the market, which is really good. And I think dealers have really tuned into the fact that there's good profits to be had in them, and they can sell them, relatively quickly, and even against other traditional fuel types, which is good. Hybrid increased 0.5% overall at 3 years, so that was the strongest performing fuel type. So yeah, I mean, the trend continues, and it's nice to see that some of these have flattened out or even increasing now, which is a relief, I think, for either a lot of dealers or certainly a lot of OEMs as well, and for RVs and what have you.
And how much of this, just talking there in terms of the price point, and I know you've highlighted that in the editorial around those price sweet spots in the market, but obviously supply and limited supply in some cases of certain makes, models, and fuel types.
Yeah, I think look, supply. We know that demand has been strong in the trade arena at the minute, and I think that's very evident. It's obviously there's a bit of a disconnect, I think, between trade and retail at the minute. Retail's not performing as strongly as trade, but there's massive demand and hunger in the market. I think it's really interesting to see some of the models which have gone down and up in price in terms of where they sit in terms of price point and I guess volume coming back into the market, and it's just fascinating to watch, to be honest, Phil. It's all over the shop.
Yeah.
Yeah.
I mean, that is, isn't it, for you guys there at Cap HPI? It's trying to find that detail within it all, isn't it, at the minute? I mean, just on the points made earlier, I mean, what, in terms of price movements, what stood out in terms of some of those big winners and losers in terms of those makes, models, fuel types, etc., throughout the month?
So it's really interesting. We need to look at some of the electric vehicles. I've highlighted a few here. So actually, electric vehicles dominate some of the biggest movements down. So Mercedes EQS, that's down 7%, a big number of £4,700 almost. Um, You've got Mercedes EQE, that's down 5%, sort of £2,300. But on the flip side of that, you have got electric vehicles which are going up as well. Mini Cooper, another 6% this month of £750. Um, it's ID3 up 4%, £550. So and there's lots of vehicles within it which are, I think they tend to that over £20,000 price point continue to fall. I think in some of the biggest fallers, but certainly the ones which are under that price point, as I said earlier, they're the ones which are increasing the most. So the difference between the two is quite vast, but you can understand why on both sides of the coin, to be honest, in terms of drops and increases.
Yeah, interesting. I think we always say it, and we should stop saying it now. That the devil's in the detail, but you've got some of those big winners that are offsetting a lot of those big losers as well. That there is that disparity now, isn't there, in terms of, particularly as you say there, in the EV market, that there is still some big downward movements, but they are being offset by some of those bigger upward movements as people start to see the value and price point of those vehicles.
Oh, indeed, yeah. It's. I think that the dealers which have tuned into some of the, and we've got new dealers. Well, we've got dealers who are starting to, deal more in BEVs, and they can see the benefits from dealing with it. Within it, there's good profits, good days to sell, and guess what? There's more BEVs coming back now, isn't there, in the market? So there's less of the other sort of traditional fuel types. So I guess it's a case of it's a bit of a learning curve. We'll try it. We'll go into it. We won't overstock them. We'll buy a few. We'll sell them quickly. We'll come back to the market and buy a few more. And I think the more and more people who do that, supermarkets have increased, I guess, in terms of their overall, volume of vehicles that they're advertising, as well as some of the independents as well. But that's what the market needs, is being forced into that situation, and it's coming thick and fast now. But the good thing is that they are selling they're desired by a retail consumer when they've done the homework.
Yeah, no, I agree. I think I think the fact that some of these dealers now are starting to invest and stock some of this product is good. But we'll be back with more from Jeremy and the rest of our look at Cap HPI September trade values after this brief break.
You're listening to All the Chatter That Matters, a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Jeremy, every month you analyse retail activity by days to sell. How did they perform in September compared to August?
So it was a slight decrease overall when we're comparing overall market. Slight increase in days to sell by 1 day. So average days to sell were 40 across all fuel types to 41. Franchise year was slightly up from 34 to 35 days. Supermarkets remain the same, but we know how keen they are. They can be on price and chasing the market, so to speak. Independents increased by a couple of days from 50 to 52. So, but pretty good, still pretty good across the board, though, I would say.
And what days to sell trends did you see by fuel type? You've already mentioned that we're seeing more EVs in the market. Did anything particularly stand out on the BEV front there?
Well, BEV's actually increased in terms of average days to sell by a couple of days, but I think that's probably a little bit more volume coming into the market.
Mm.
And actually, September's been a little bit slower, from terms of our retail feedback, and from what we can see, vehicles, coming off our platform or our database. So yeah, it's been a little bit slower, I think, through September. So I think some of the numbers are, I guess, relative and sort of highlights the fact that it has slowed down a little. Petrol and diesel are up by 1 day as well. PHEVs obviously made the same, remained the same for August. So, yeah, I guess just highlights probably a little bit of a slowdown after the school holidays and what have you. But yeah,
Yeah.
nothing untoward.
And you also poll the views of the auction houses. What were they telling you about stock levels and trade demand for the month?
Trade demand's been really good, really good. I say that disconnect between where retail currently sits, or that slight drop off from maybe the summer months into September, but demand is well, it's ever increasing in some ways. Less vehicles coming back to the market in the minute. 75% of respondents to our auction survey said that stock levels either remain the same or fell. So it's there are, it's not across the board. Usually when we get to this point in the month, we start to see that sort of tip up, I guess, in volumes coming back to the market. Just hasn't happened yet. So, vehicles are slow in coming back, through fleet, through part exchanges. And yeah, it's definitely put some more heat into the market.
And one of the things I noticed looking through the editorial for this month is you report plenty of activity from independent and car supermarket buyers, but you also noted a lot of activity from franchise dealers, which traditionally you wouldn't expect in September when they're more focused on new car sales with the plate change. What did you see there?
But definitely, to see franchise dealers out all the way through September. Usually they're sifting through part exchanges, delivering new cars.
Hmm.
And that's just surprised us in terms of the level of activity we've seen across the market. And that adds extra competition for the independents of supermarkets, which obviously, that's reflected in a positive book movement, albeit, it's a marginal increase. But it has definitely sort of flowed into keeping the market alive and, competition strong. So yeah, surprised us a little bit. Not there have been a couple of buying bans on from some franchised or some larger groups, but even it's been short lived, and then they've come back to the market again. I think everybody's looking for, again, the value side of it, and I think some of the used cars have been successful for them, certainly at certain price points, at age points, and I think that's why it's been really strong to see them out. They're obviously not getting as many part exchanges for whatever reason. There's competition out there for part exchanges for a retail consumer to perhaps shop around in terms of a part exchange price and hopefully achieve the best amount of money they can for their vehicles.
And I mean, crystal ball time, although you have touched on a little bit of thoughts as we sort of head into the final quarter of the year. I mean, obviously, what you've just been saying there, and that sort of the franchise deal is out in the market a little bit more. If there's an element of they haven't had the part exchanges coming in as they would normally do in that plate change month, so they've had to obviously be in the market quite actively buying stock, because stock is obviously prime at the minute, isn't it, for those retail products. What do you see now as we move into October, and we talk about leasing renewals at the end of September? Let's say we might see some tactical registration activity, should we say, Jeremy?
Yeah.
At the end of September there. What do you expect now as we move into October, and obviously the final quarter of the year?
So I think that 3 years, we think the average movement down, seasonal movement, is a 1.5% drop from October into November. We think we might be on the stronger side of that again. We can't really see, because of the lack of stock around and the demand at the minute, it might fall off a little bit in terms of demand based on, maybe some more vehicles coming back into the market, competition easing slightly, different, I guess, buying strategies, business strategies across the board. But we do think it's probably going to remain, still pretty good, stronger than seasonal average, which we've had all year, other than 1 month of March. We don't really see October into November being any different. I think November into December could be, much more seasonal and probably fit more closer to the 2% average drop, from November into December. But we still think we probably might even be on the stronger side of it as well as people stock up for January. So, as long as demand rate remains, relatively close to where it is at the minute, we can definitely see it being probably on the stronger side of the numbers I've just said.
Yeah, because we were talking before we started to record that there's no short-term signs of any significant levels of stock coming into the market, particularly in that 3 to 5 year old marketplace. Is that there's no clear indications of any oversupply of product coming in.
No, definitely not. And I think, for all the feedback that we've received, whether that's through auctions, whether that's through dealer, I think everyone's in the same opinion. There's not going to be, a tsunami of stock to come. I don't think we've reached a peak yet in terms of what's due back. But I think with the demand being where it is, it should be quite nicely dished out, and leveled out. So we might get a little bit of more of a spike in volume, which would probably be obvious to state, as soon as we've not seen it yet from fleet and lease and what have you. But yeah, we just need, I guess, things to remain relatively stable. And I know we've obviously got the upcoming budget in November. Let's hope that doesn't, again, that's another story, but let's hope there's going to be no surprises within that. But as we see it currently, without any other further interruptions, potential interruptions, we can see it being pretty good.
No, brilliant. I say, it's fantastic going through again a bit of that detail there as to sort of those winners and losers and what's been happening in that sort of fuel type market, and the bits that you called out within the editorial, those price hotspots that are driving the market. For me, just huge thank you again, Jeremy, for giving us a deeper dive into what's been moving and driving some of those values from September into October there. Obviously people can get the editorial. It's now live. If you go over to cap-hpi.com website, then the editorials are there for the cars, the commercials, and the goal book forecasts on there that you can do. Have you got any? I think you've probably got an imminent webinar coming up, haven't you? I think you're just finalising the dates on that as well, but for people to keep their eye out on that.
Yeah, first week in November. It's going to be we think first few days of November, maybe the 6th. We're just trying to finalise the date across all the participants. So there's one coming up then, which should be good.
Yeah, a key point as well, won't it? It would be a good for anybody that hasn't been on one of those webinars. I do encourage you to join. It's a good overview. You get the chance of asking some questions as well with all those involved. So it's very worth the while joining that, isn't it? And it would be a good key point to join as well as we finish off the final months of 2025 and think about 2026 a little bit.
Yeah, definitely. Dylan will go through, sort of the forecast and what, the business's thoughts and his thoughts in terms of what's going to happen in the first 3 to 6 months, because it could be, quite interesting, I guess, as what happens, but also, what we've seen throughout the year as well from Chris. And it's always a good one.
Yeah, definitely. We'll provide information on that as and when you confirm dates. But Jeremy, many thanks for joining us. Always a pleasure to catch up with you, and we look forward to hearing how the October market went this time next month. But that's all for now. Many thanks for joining us on this Motor Trade Radio Weekday special. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.